Hey everyone, my name is Felix and welcome to Fiscal Voyage. If you're new to the channel, make sure to hit the subscribe button and like this video. In this video, we're going to talk about a utility stock that's undervalued and is on in a technical analysis on the 200 moving average on the monthly chart, and we're going to look at that, and that's a good indicator of a potential upturn, and I'll show you why. So let's get started with the video. All right, so the utility stock we're talking about is Eversource Energy, ticker symbol ES. Right now it's going about $60, $59.77. It has a dividend yield of 4.79, market cap of almost $21 billion. And you can see here on Sinking Alpha for the past 1 year is down over 21%. Year to date is down 3%. And it's actually, you can see here, it's getting up a little bit. It was as low as $52 and it's back up to 60. But I'm going to show you why that it hit the 52 and now it's heading up, and I think it's going to go higher as well. I own shares of this stock, but let's go to the fast graph. You can see here this company has been outstanding earnings, and most utility for the most part has a steady earnings because they're regulated, and they're needed, right? There isn't really much competition in each part of the country for utility stock. This is an electric utility stock. As you see, here has a A minus credit rating. As I mentioned before, yield of 4.79. The earnings yield, which is great, at 7.35 or 7.4%. Like this to be at 6 or higher. The higher the better. So that's great. The blended PE of currently right now is at 13.6 with a normal PE of 18.6. So you can see here, anytime it's under the orange line is a good indicator that it's undervalued using the fast graph tool. So you can see here, this company has been steadily growing very nicely. As you can see here, 5, 6%, 5%, 6% since 2014. It's been a consistent increase, a consistent grower. Not a huge grower like Meta, Tesla or Microsoft, Google, but this is one of those stocks that is nice to have in your portfolio for the yield and the consistency of the growth as well. And one thing I like about it, you can see here in the 08-09 crisis, financial crisis, the company actually continued to grow earnings at 159, at 186 a share, and 191 a share, so 37%, 17%, 3%, and then they had a little drop off here in 2012, a 4% decrease, but picked it right back with 11% increase. So I like this. If I remove the price, this looks solid to me. I like this. I like when I use fast graph, just look at the company itself. How is the company doing? And I like it when the chart is like this. This is beautiful. So if we look at the price, you can see here it's undervalued based on the normal PE of 15, and this stock normally goes for PE of 18, so which is over here. So I like to shorten the time period to the past 8 years or so to get a better look at how the company's been doing the past 5 to 8 years. And you can see here the normal PE changed to around 21. This over here was a very overvalued stock. Obviously this is not a good time to be buying the stock at this price range. Over here was a good buying opportunity, about $55 to $60. It was slightly undervalued, but now you can see here is extremely undervalued, and we're gonna look at technical analysis to show you, why this is a great opportunity to buy shares of this company. If we also look, if it were to revert back to a normal multiple of 21, you have a great potential of 27% return for the next 2 to 3 years, which is outstanding. I don't think it will go back to 21. I think in order to do that, the Fed will have to decrease interest substantially. But I do see it returning to a multiple of 15 to 18. So if we were to go to just a 15 multiple, you have a 13.5% annual rate of return, which is good for utility. And while you're waiting for that, you're having over a 4.79% dividend yield, receiving income with that shares. And another thing I like about this is if we go to the performance, let me max this out. You can see here this is a dividend grower, and it's been growing this dividend as far back for fast graph in 2004, which is outstanding. It had great years of double-digit growth, but I see it growing roughly based on earnings growth, the 5 to 6%. So you see here the past almost 10 years, 6%, 5%. So that's still real good growth there. So I really like that. And we forecasting, you can see here, analysts expect about a 5% or more, 5.5% growth for the next few years, which is great. If we go to long term, still continue to be with the growth around the 5%, which is good at this valuation. So this is why I like this stock a lot. So if we go to Morningstar, first off, Morningstar gives it a 4-star rating. You can see here with a fair price at $73. So that's another indicator that is undervalued, where you get it about 59 bucks. So Morningstar has a $73 price target for this, indicating undervalued. And another thing I want to look at here, you can see the competitors or under other companies that does the same thing as Eversource. You can see here they're basically fairly valued. You see here ED fair value is 91, is $88, $65 here for PEG, and it's $63, $35 here, and it's $35 fair value. Where you can see Eversource is undervalued. It's not with this, so there's a potential from going from $60 to $73 with great dividend yield. And you can see here's a 4-star rating, where the other ones have 3-star because it's fairly valued. Another good indicators for undervaluation I like to look at here is price to sales. This is based on price and revenue. You can see here currently is at 1.73, where the 5-year average is 2.6. So that's another indicator that is undervalued. Price to cash flow 9.85 versus the 12.11 for the 5-year, and price to book at 1.45 and 1.9 versus the 5-year average. So those are another indicators that I like to look at of undervaluation. The debt to equity ratio is quite high at 1.89. I like to see this at 1.5 or lower, but as utility stock, they are capital intensive, so they tend to have a little slightly higher debt to equity. But revenue, you can see here, revenue grew over the past 10 years over 10%, which is great. Operating income growing at 8.3%. Another thing I want to show you here is analyst forecasts. Let me see if I can find it right over here. Okay, and right here. So you can see here revenue expected for 2024 a 5% increase, and 2025 3.9% increase. Net margin is also expected to be increasingly slightly from 12.3 to 12.6 to 13. That's great. And the dividend is also expected to be increasing. So we're going to continue to get dividend increase on this high yield undervalued stock. So now we go back to our technical analysis here. So we have the monthly chart over here. You can see here there's great support area around the $50 to $55. Great support, and it actually double bottom here. So it hit here, it went up, and then it hit it again. So that's a great technical indicator that the bottom may be set around the $53. So we still have opportunity to buy more shares around $59, which is great. As you saw, Morningstar has a fair value around 73, I think it was $72, so right up here. So we have a potential to continue to go higher. And while we wait, we have a great dividend yield at over 4.7%. But you can see here, this technically there's support in this area, and it coincides with the moving average, the monthly moving average, and the RSI is also low here around the 40, which is a good indicator of oversold if you're familiar with the RSI indicator. So as you can see, a lot of things is going for this company to go higher. So that's why I own shares and plan to buy more shares. Now maybe hopefully we get a little pullback. If we go to the weekly chart, hopefully over here is the weekly chart. Hopefully it'll bounce here to 63, maybe come back to 57. But this right here, this week has been a very strong week for utility. And this is a big candle here. It was basically red over here, and then it took all the sellers out, and to me this looks like it's just going to go higher the next few weeks. Maybe it'll fight over here on the $64, $65 range, and then come back for a little pullback and then head higher. So this is why I like this stock a lot. Long term, if we go back to the fast graph, you can see here long term it looks great. Company has been doing outstanding, 5-6% grower. It's undervalued, nice yield. Overall, I really like this stock, and that's why I own shares of this stock as well. So if you guys really enjoyed this video, make sure to hit that subscribe button, to find more videos like this, and hit that like button for the YouTube algorithm. And let me know in the comments below if you guys have shares of this stock or other utility stocks. You know, I like to go back and forth with you guys and just talk about, you know, different financial stocks. And sometimes you guys give information of stocks that, you know, I'm not aware of. So that'd be cool if you guys leave some comments down below. And so I'll see you guys in the next one. Take care.